Hey, what's going on, Bulls and Bears? It's Tuesday, August 2nd, 2022. The economic pain just worsened for most people. Now, before the end of this video, we're going to tell you how you can be one of the few that it's not getting worse for, and what I've been doing and what I think many people have already been doing, but we're going to put it out there just so we could try to help ourselves stay ahead of the curve on what's headed down the road in this economy and the financial environment that we're going into. Now, the economic pain just worsened for most people. Let's take a look at a recent study here. Just came out yesterday. Recent CNBC article, Unrelenting Inflation is driving up costs, leaving more Americans living paycheck to paycheck. Now, why is it that just about every study that we look at, every piece of data that we look at, every chart that we look at, things continue to get worse? The debt gets worse. The amount of debt individuals are carrying getting higher. Of course, we all know that government and national debt continues to explode into the stratosphere. And now combine that with the rising rates, and the higher rates equals a bigger payment for people, not just with something they're looking to purchase like a home, but their existing credit card debt. Folks, we're at all-time high debt levels for credit cards and all other types of debt, housing debt, personal loans, auto loans. Credit card debt, everything is at an all-time high, and people somehow think that rising rates are not going to lead, for many people, they're not going to lead to economic disaster. Now, it's going to be a small group of people that will succeed through this time. These are people that are out of debt. These are people that don't have to show off and buy the biggest, nicest house and drive the newest, nicest cars. Guys, we have been right on this channel about just about everything that I can think of. And look at all the people that said that home prices were going to crash, that we're going to see a crash in the cost of living, that the car prices were going to come down and crash. None of that has happened. Sure, asking prices have come down some in the housing market, but that's just because the prices and what sellers were asking for these homes was so outrageous to begin with. All right, we're now in August 2022. People said the housing market was going to crash last year, into last fall and winter. This spring into summer, they said it was going to crash. It hasn't happened yet. We're still up over 14% year over year nationally on home prices. And we're in a very difficult spot now where home prices have come down some, just month over month. They're still higher than what they were last year. But the people waiting on the sidelines to buy a home are in a worse position now than before, because now prices are higher than last year. Interest rates are higher, so even with this minor drop that we saw from month to month, from May to June, people are in a much worse position because the rise in the higher mortgage rates have priced these people out of the market. And these are mostly first-time home buyers. Now, cash buyers and investors that are going to just pay cash for a house, they are not affected by these high mortgage rates. And actually, we say high mortgage rates, 6% is not yet that high compared to what we've seen over the past 10 years. It's high, but historically a 6% mortgage is not that insanely high. It's just that people have been so used to rock bottom mortgage rates for so long. Many people just accepted that as the new normal, and these are the people that went out and bought a home. They paid top dollar. They outbid 20 other people and went 20, 30, 40, 50K over the asking price. These are the people that are going to be paying the piper here very, very soon. And now they see that their house payment has eaten up a big chunk of their monthly income. Now combine that with these other costs that are just causing a lot of pain for people: the grocery bill, the energy bill, the taxes and the insurance on these overvalued properties are putting a lot of people in the poorhouse, and what's many people call as being house poor. You have a house, and if you bought a few years ago, you may even have a decent amount of equity in that house, but month to month, you're struggling to get by. You're house poor. And even people with lots of equity in their home are part of this population here, which is most of the population, that are living paycheck to paycheck. But sadly, a lot of these people are renters, also living paycheck to paycheck, only to look out the window and see the landlord, the property manager, coming up to deliver a notice on their door that rent's going up again, and they just simply cannot afford it. Another recent article, CNBC, household debt tops 16 trillion for the first time, fueled by higher inflation and interest rates. Right? And this continues to happen. This continues to get worse every time we look at it. But I still have people saying, hey, JJ, you're wrong. The prices are going to crash. Right? If prices are crashing, why are people getting into more debt? They're getting into more debt because they have to pay more for everything. Prices are still going up. Rents are going up. Right? You may see prices come down a bit. The cost of gas came down a bit recently. But it's still, in most places, about double of what it was just a year and a half ago. Now, looking at the second quarter numbers, this is April, May, and June of this year. Mortgage balances rose 1.9%, or $207 billion, to $11.4 trillion. Now, what does that tell us? That a lot of people bought at the peak of the euphoria, the peak of the bubble. And again, I have to make this clear because some people get the wrong idea about my words. Home prices are coming down. The problem is they're just not crashing, and they're definitely not coming down fast enough for a lot of these people that are waiting on the sidelines to buy a home. By the time homes get down to an affordable level, the average person, working person in America, the average close to 70% of people that are living paycheck to paycheck are going to be wiped out. Bankruptcy is going to be knocking on the door because markets can stay irrational longer than most people can stay solvent. Let me say that again. Markets can remain irrational longer than most people can remain solvent. In other words, you take on debt and you think things are going to turn around, you think things are going to get better, things are going to get more affordable, so you don't worry about it. You take on debt, you swipe your credit card, and then it gets to the point where you can't pay your balance in full every month. Well, that's okay because things are going to get better. There's going to be this big crash. Prices are going to come down. Car prices are going to plummet. Home prices are going to plummet. The cost of living is going to plummet. But yet, it comes down a little bit, but you're already in so much debt, you can't pay your monthly credit card balance in full. So now you've got an 18, 19, 20%, even higher in some cases, credit card interest rate to contend with. And that's adding on hundreds, in some cases thousands, in interest every year for the people carrying these balances. And with the levels of credit card debt now, I would guess that it's closer to $4,000 or $5,000 a year just in interest now for the people not paying their credit card balance in full. We'll have to get some more data on that for you on their next report. But the point is, debt is increasing, and these people that are in debt, by the time prices do get to an affordable level, they're going to be wiped out. They won't be able to qualify for a mortgage. So what does that mean? Cash buyers and people waiting on the sidelines, waiting patiently, are going to be rewarded. And that's what I wanted to conclude this video with. If you are out of debt right now, if you have some cash, keep doing what you're doing. Don't try to show off and buy a new car. I mean, obviously, if you're a millionaire, then go out and buy a new car, pay cash, and you'll still have money down the road. But we talk about FOMO, that's fear of missing out. A lot of these people that bought homes at the peak of the housing bubble had that. They were afraid prices were going to go up forever. They thought it would just be endless QE, that nothing would ever change. And while prices are coming down, it's not coming down fast enough, but prices are coming down. And if someone bought at the peak of the bubble, that's a very tough position to be in when you paid more for the house than it's worth. In other words, you have negative equity in the home. That's mentally a very tough spot to be in, and it's going to cause a lot more pain for more people. So yes, I continue to hold and wait, holding cash, also still accumulating some assets on the side at the end of the road here, at the end of this financial devastation here. Once the money is completely destroyed, we're talking about fiat currencies. Metals, I'm talking about precious metals, gold and silver, are waiting. And people say, well, JJ, you said silver prices were going to go up. Yes, but that's the end game. So I continue to stack. That's why I say keep stacking. If I thought silver was going to skyrocket next month, I would tell everybody in every video, throw all your money into silver. Everything. Buy silver and nothing else. I've never said that, and I'm never going to say that because this is a long-term strategy. Right? Don't go out and spend your money you need to pay utilities on silver. If you have some left over at the end of the month, buy a few ounces. I try to buy at least 10, 20 ounces each month, sometimes twice a month if I have a good month. While also putting away cash, not much since I live in California, things are pretty expensive. But staying out of debt, continuing to grow your savings, grow your investment, keep stacking. That's what I'm doing, and I think that's the best strategy for most people, but everybody's different. Please let me know what you think down in the comments. I want to thank each and every one of you for your support, for coming back to this channel, for all the super thanks. I've got to give a couple thanks out to people that have helped support this channel. And I'm happy to say thank you to the following people: Maria Rivero, Sassy Pants, once again with a very kind donation, Christopher Quinn, thank you all very much. Oh, Greg Johnson, Kazam99, thank you very much. And actually that reminds me, I got an email from somebody here recently, another person that bought in 2020, and they said thanks to me because I said home prices were going to go higher, and we were right, and they had to sell this year because of some health issues, but they sold for a huge profit. Nobody else out there was telling you how this market was going to be propped up and inflated. And I think what we're telling you now is also correct, that we're going to see some price declines, but it's going to be very gradual, very measured. It's not going to be a crash because there's still a lot of market propping happening behind the scenes, and there's a lot of cash buyers on the sidelines. We're talking about big money, hedge funds, institutions. The average working person having enough cash to buy a home without having to get a mortgage, that is a very small, tiny portion of the population. All right, so another word of advice: keep your credit score good. I know you think that credit score is a scam, and the credit scoring system is not fair and it's a scam. But if you need a mortgage of any amount, you're going to need to have good credit. Even if you have a 50% down payment, maybe even more, 60, 70%, if you need to finance that extra 20, 30, 40, 50%, whatever it is, you're still going to need to have good credit because banks are going to tighten lending. Keep your credit score up there. I know it sounds simplistic, but it's going to be very difficult to keep your credit score up in this debt-ridden economic environment. All right, everybody, keep stacking. Thanks, everybody, for being here. Be well. Bye for now. Peace.